It's the one night of the year that men securely control the remote control. Do we have to give it back this time? For one glorious evening, for reasons completely unknown to us simple men, our wives, girlfriends, and significant others agree that watching a football game is the path to happiness. We've been treated to watch up to 59 Super Bowls, depending on your age, with Super Bowl 60 between the New England Patriots and the Seattle Seahawks set to kick off Sunday evening. Most people will remember watching their first Super Bowl. For me, it was Joe Montana and the 49ers, overwhelming Dan Marino and the Dolphins. Others can't forget local Clemson product, William the Refrigerator Perry, Walter Payton, Sweetness, and the colorful cast of the '86 Bears doing the Super Bowl shuffle awkwardly on stage before they trounced the Patriots. Even when the games were blowouts like the ones I just mentioned, they were always spectacles and were a must-watch. The commercials themselves have taken a life of their own. Even though Tar Heel Drake May takes the field on Sunday, for me, the big game this year is overshadowed by a different kind of Super Bowl being played out in the financial markets. This AI Super Bowl game started in 2022 with the launch of ChatGPT, as we saw Microsoft stock take off after its announcement. Who's playing in this Super Bowl? It's the AI dreamers versus the AI bankers. Well, it's halftime, and the dreamers are smashing the bankers 35-10, but the bankers have begun to gain some momentum. Wednesday, the bankers scored big on Nvidia's announcement that maybe they won't be funding ChatGPT to the tune of $100 billion. Because ChatGPT has $1.4 trillion in spend commitments with so many big-name firms in technology, with only a $13 billion in revenue, it's gotten real fast. The removal of the promise of the $100 billion was like a giant jingle block that was ruthlessly tugged out of the AI stack of hope. It appears to have destabilized the current market narrative and put the spotlight on the financing of the big AI firms, even on the same week that it was revealed that SpaceX and xAI are merging before an IPO this year. Simultaneously, private AI company Anthropic announced plugins for their agentic co-work software that focuses on workflows, a core ingredient to enterprise software that will allow someone with zero coding experience to create their own HR or CRM software, for example. Our own company is in the process of proving that this can be done, and it is an existential threat to software companies, particularly ones with very expensive subscriptions. On top of that, the financing of all these technological marvel data centers is in question. Oracle was everyone's darling in the fall when they smashed earnings expectations, but now banks and analysts are questioning if they have the capital to complete their huge data center construction projects. Banks and venture capital firms are starting to ask some very basic questions on their loans that just maybe they should have been asking all along, like, what's your cash position? How much debt do you have? And when is it exactly that you're expecting to make money from this data center venture? It's like everyone just remember that, well, math does matter. And if your company's debt to income ratio is 10-1, you're going to have some major problems. Oracle announced today that it's cutting 30,000 jobs as it tries to pay for its financial commitments. Just maybe, the bankers discovered their calculators at the bottom of their backpacks and realized that the circular financing of companies in the AI space, both public and private, were essentially trading revenue numbers as they invested in each other and resembled a three-team NBA trade of players of equal value where there was no improvement for any team. They were passing the exact same money back and forth and calling them earnings projections. Well, start counting the beans because don't look now, the bankers just scored another touchdown in the market Wednesday. Speaking of assets with no real cash flow, Bitcoin has just been crushed in the last couple of months and has now lost every bit of gain since Trump was elected, officially down 6% since November the 5th, 2024. There were some absolutely abysmal, blood-red stocks on Wednesday's report of the market movers. That has continued today. While the overall index numbers didn't look bad at all, some of the big tech names, many of them software stocks, were just slammed. As of after hours on Wednesday, Advanced Micro Devices, AMD, was down a stomach churning 17.3%. AppLovin was down 16%. Palantir got thumped to the tune of 11.6%. Micron was down 9.5%. Lam Research down 8.8%. PayPal was beaten down 20%. The list of AI and software as a service or SaaS names that got knocked down and are drooling on the 20-yard line today is long. The market's outlook on AI seems to be morphing. It's like the alcohol just wore off on the plane ride home after a captivating romantic honeymoon. We've just gotten into our first serious fight as a newlywed couple for AI promise versus AI reality, as we just couldn't agree on the finances of buying a data center. And for the first time, we're starting to look at each other squinty-eyed on the plane and questioning our commitment. What have we gotten ourselves into? For once, thankfully, I'm not speaking from experience, but today there is a feeling that comes with the red numbers that perhaps the Jenga block that Nvidia yanked away from ChatGPT is the first salvo in a very ugly war to come. Maybe we should start calling Nvidia CEO Jensen Huang Jenga Jensen, because this week some blocks are a-tumbling. And maybe the threat to software companies posed by AI is a clear and present danger. As an investment committee, we're tasked to try to produce the best returns we can in your WTA growth and WTA Christian value stock portfolios. We're thinking ahead a few steps here. It could be that we are misreading the environment. I mean, it's easy to do. What's true one minute isn't true the next. But we do want to be nimble and flexible inside these model portfolios for our clients, meaning that we want to have the cash on hand ready to go should this be the start of a market event that leads downward. We've already had the valuation talk with you a couple of weeks ago, second highest in history, remember? So we are creating a little cash inside of our growth models, but cutting a few companies that no longer fit our criteria. This will be a little dry powder for buying in if the market should tumble further. We want to be able to have the flexibility to go shopping on your behalf if the market goes further south. So we're being proactive in creating that flexibility now. If it turns out the market doesn't correct further, then we'll simply have some more dough to enter in some stock positions in the future. If we're not 100% invested and the market goes up from here, then so be it. I would much rather explain to you that we were being cautious and proactive than cavalier and oblivious to some warning signs. I would rather explain that you didn't get another 4 or 5% on a bullish move because we were being cautious, than explain we lost you as much or more than the market on a bearish move. This AI Super Bowl is like Super Bowl III in the markets. As it relates to the advent and influence of new technologies on corporate America, there have been two other real Super Bowls. The first was the PC and software revolution in the 1980s and 90s when tech firms took away the market dominance away from energy. The second was the emergence of the internet, culminating in the dot-com crash of 2000. And now we have this new AI Super Bowl that started out in 2022. Who will win out? The incredibly streaky AI dreamers or the predictable run-first AI bankers? Who is Namath and who is Unitas? Remains to be seen. But we have hedged our bets here and traded on your behalf as the bankers appear to be coming on strong. If you would like to pick a side in Super Bowl III in the markets, then give your advisor a call with your picks and we'll make it part of your plan. Remember, if you listen to us, we'll change your financial world. Go Drake. And now a word from our compliance department. Past performance is never a guarantee of future results. We offer a lot of services. Our planning, tax, and insurance strategies are designed to improve financial outcomes when implemented as recommended. We're confident in these strategies, but results will vary based on individual circumstances. Investment results cannot be guaranteed unless otherwise indicated. No third-party individuals mentioned in this video are clients of our firm, nor have they been compensated for appearing. This video is for educational purposes only. We do not recommend anyone buy or sell any security discussed here. Instead, we recommend viewers call our office for personal advice about your circumstances.